Let's talk to Clem Chambers. He's the founder of ADVFN. Very good morning to you, young Clem.
Morning.
Right, in terms of the markets last week, in summary, the Nasdaq was down just over 4%, slightly weaker non-farm payroll. Markets seem very, what's the word I'm looking for, in a sort of very calm phase, okay? With all the senior fund managers and the likes now sitting on the beach, okay, do you think there's going to be any crisis that gets them back this summer?
Well, I remember the Euro crisis when all the politicians went on holiday in the middle of it, and it didn't seem to hurt that much. I mean, I'm one of these sort of people that want to be on top of everything in real time, but it seems that those people that take things in a loping stride get away with it. But I don't think we're going to get any crash. I mean, I've now decided that, the central banks will work so hard to keep everything smooth that, the slightest hint of anything bigger than a correction, and they just come in and provide liquidity. So there's a kind of, there's a general put out there. So, you've got to really buy the dips and sell the rises.
So in terms of the politicians, okay, we've had Dr. Liam Fox talk about Brexit. We've had Mr. Carney talking about Brexit, okay. Is it right that basically the politicians are driving the markets?
Well, I think it's more like the central bankers putting them in a straitjacket. I think the politicians, or when you hit the political level with the markets, you're really kind of doomed. But I don't think, theory says it's already priced into the market. And I think that's right. It's only what people can't imagine to happen. For example, a second referendum, which nobody thinks is going to happen, but could. If that was announced, that would affect the markets. But, a disastrous Brexit, that's already in the market. That's already priced in. And if you look at the American market against the UK market over the years, UK market's performance is pathetic. France, the UK, pathetic. Germany and America, stellar. So, they're the fundamentals of what's going on at the moment. And I think, all the nuances in the market that are calculable are already calculated in. It's only the so-called unknown unknowns or the extremely unlikely that actually will have an effect on the market. And then if it's a big unknown, in will come the Fed, in will come the central banks, and basically put a bottom under it. So I think it's, in a sense, safe to go into the water as long as you buy low and then sell the rallies. But you've got to sell the rallies, otherwise you're going to be back down again later.
Yeah. Okay, in terms of Bitcoin, what are your latest thoughts on that?
Well, I thought it was interesting when China devalued a couple of days before that. Bitcoin rocketed. That's all kind of dying down a bit now. Maybe that's happened. And now Bitcoin is falling off. I don't really see anything major until there being a new wave. And I think that new wave will start earliest late autumn, maybe a bit earlier, maybe a bit later, maybe a lot longer. But I think we're in a basing mode at the moment. I'm still praying for my leg down so I can buy lots and lots, but I'm acquiring at these levels, little bits. So I think that I'm really staking out the rally, which will come sometime in the next year. And that next rally, maybe two, I don't really care, will be very large. And you'll see Bitcoin up $50, $60, $80,000. Unless, again, disaster strikes and everybody makes it an illegal thing and you're not allowed to do crypto anymore and it's all against the law, which could happen. But I don't think it will. I think we're seeing the slow but sure embracing of crypto in the world. And I think that leads on at some point to another bubble, as people will call it, a bubble bust. And I think those bubble bust cycles will go on, for potentially decades.
Well, it's quite interesting. There was a headline in the weekend press. A gentleman suggested that Bitcoin had loads and loads of upside from here, but we shall see. In terms of themes for Q4, as basically we come back from the summer break, okay, do you see that the markets will be in this sort of holding pattern for the rest of the year?
I think they'll be in a holding pattern for several years. What is going on is the Fed is rolling back $1 trillion or 2 or 3, depending on who you believe or what you believe it will pan out.
Yep.
They're taking that liquidity out of the market, and they will do that slowly but surely and try not to crash the market. So they will take that liquidity out until the market swoons, and then they'll put some back in again to keep it at level. So they will manage it sideways, very much like the Fed did after the dot-com crash. And it'll take something really bad to make it crash, which they feel they can't support. And that is how it will be. So it will be range bound like the Dow was after 2000. Now, what will get badly hurt is the emerging markets, and you're seeing that in Dubai now. The pool of money has been drawn out by the Fed from the periphery. Basically, the money, the liquidity, the oceans of cash that have been sloshing around the world, thanks to the Fed and other QE people, is going to be drawn in. So that pool is going to get thinner. And as you're seeing in Brazil, as you're seeing in Dubai, the periphery is going to lose its cash flow because that easy money is going to drain from there first. It's going to drain from the periphery first. And you're seeing that. And therefore, you're seeing a recession in Dubai. You're seeing big troubles in Brazil. And I'm sure other BRICS countries will also get that problem. And to an extent, you're seeing it in China. So you will, and you'll see it in India. All the periphery will actually suffer pretty badly from the reverse QE. And if you're not in the periphery, if you're in the core like we are, we just hope that the central banks can manage it so that that toxic dry, desert of no liquidity doesn't actually hit our shores.
Right, so we've run out of time. Thought-provoking as always. That's Clem Chambers, the founder of ADVFN. Thank you, Clem.
Cheers, Nick.